100 points plus on the Nifty, 350 points on the Sensex. And right now it's the heavyweights which are pulling their weight behind on the Nifty. ICICI Bank at the high point of the day. We have HDFC Limited on the at the high point of the day. HDFC Bank as well. And Kotak Mahindra Bank. That one should come up for you. A sharp spike seen there. So all the heavyweight banks pulling their weight behind on the Nifty. And then you have the biggest of them all, Reliance too, at the high point of the day. So a fair amount of recovery seen for the frontline indices. The mid-caps still underperforming. Let's see where that goes. But as of now, it is a good day. So let's start with all the top stories that we're tracking. Oil marketing companies, they outperform while Sun Pharma and Tata Motors lag. Mid-cap index still in the red, but recovers from the low point of the day. The market climbs to the high point of the day. The Reserve Bank governor visits the Prime Minister. Sources say a middle ground may have been found. Rupee appreciates. It's the best performing currency today, and that's an exclusive. Crude oil prices tumbled to below $70 per barrel after the US President Donald Trump put pressure on the OPEC to not cut supply to prop up the market. Shares of oil marketing companies, all of them, they surge. Pharmaceuticals is the worst performing index today. Sun Pharma takes a bit of a knock ahead of earnings. Auto Pharma too slips despite reporting good numbers. Wockhardt, though, takes a sharper knock after losing an appeal to launch the generic version of cancer drug Zytiga. The Bank of India stock remains under pressure following another quarter of net loss. The management assures investors that they will post a profit in the third quarter. Jet Airways, on the other hand, rises despite weak earnings on reports of a possible interest from the Tatas. All right, with that, it's a good day so far. So get you answering all your mutual fund related queries. With me is, of course, Sumera in the mutual fund corner. Over to you, Sumera.
Mangalam, thanks very much for that. Also with me this afternoon, I have Anubhav Srivastava of Infinity Alternatives, who joins in to answer all the mutual fund queries that are coming in from our viewers. So Anubhav, hi, good afternoon. Thanks very much for joining in. And it's a great time actually to be an investor, right? Because especially the kind of inflows that we've seen in October, it shows that investors are maturing, their thought process has matured, and they're not just throwing in the towel, right?
Absolutely. Absolutely. But it's interesting. Also, most people know that there's going to be a lot of opportunities going forward right up to the elections to get into the market or readjust their portfolios and all of those things. So I think it's going to be an interesting time ahead.
All right, so let's answer some investors' queries. Then first up, we have Eastwar, who's written to us on Twitter. He wants advice on which mutual fund he can invest in. He's looking to invest an amount of about 15,000 rupees per month, and he wants to go the SIP route. So Anubhav, one thing which is quite enthusing actually from this query is that he has not asked for a portfolio. He has asked for a fund. So he's not looking to overtly diversify, even though he has 15,000 rupees to invest.
Right. Look at a large cap fund. You know, HDFC 100 should be good enough. This is very sketchy information to actually provide a significant input, but that should just do it for you. If you want to take it a little further, take in the GSEC fund and just allocate it and go ahead with it. That should be good.
All right, so maybe just the two funds would suffice for the moment. All right, up next, Mohan Pradeep has written to us from Tamil Nadu. He wants to know what you think of the Aditya Birla Sun Life Tax Relief 96. He wants to start an SIP of 7,000 rupees a month, and he's actually looking at this particular fund. He's 29 years old. He's a trader by profession. So I don't know why he has actually looked at a tax relief fund, but what would you advise?
Well, the biggest disadvantage of a tax relief fund is the lock-in that you're subjected to. So if you're purely looking at investing in the equity markets, then probably not the great way to go forward. Though you can look at the Aditya Birla Sun Life, tax relief 96. You can look at the Reliance ELSS fund. That's a good one as well. But yeah, I mean, you can do something more than that if you're looking at the long-term portfolio and at the same time trying to get the tax benefit.
All right, up next we have Mr. N.S. Prasad, who's written to us from Hyderabad. He wants to invest 5 lakh rupees. He's 60 years old. He's retired and he wants advice on what he should do. So I'm not sure if Mr. Prasad already has an existing portfolio or not.
Right.
To me, I mean, the way the question is framed, it looks like he's just getting started. So therefore, for somebody who's already retired, what kind of a composition would you recommend?
A large debt component for sure, about 40% or higher. Today, you know, given the whole scenario that's going on the credit risk side, look at the GSEC, maybe an IDFC GSEC fund, along with the HDFC Top 100 fund should be good enough for him. If you want to do nothing else, just do a 50-50 allocation and then take it from there.
Okay, up next, Rajinder Reddy has written to us from Pune. He's 29 years old. He's working. He has been invested for over 7 years now. So he has an SIP ongoing once again in the ABSL Life 96 Direct, Axis Long-Term Equity 3,000, SBI Blue Chip 3,000, ICICI Balanced Advantage 3,000, HDFC Midcap Opportunities 3,000, as well as the ICICI Nifty Next 50, where he has another 3,000 rupees SIP. The time horizon that he has in mind is 20 years. So I'm guessing what he wants to know is if this is the best mix that he has chosen, or could he do better?
I think he can do better. He can surely save on some of the tax, because he's already invested into the index fund. So rather than invest into the index fund, he should take the investment into an ETF, which is significantly cheaper. And that entire 0.5% to 1% that he saves on the fund itself will compound over a period of time. Having said that, I think one of the things, and I'm assuming this is just a pure equity portfolio, one of the things that is missing is an international allocation, and that goes back to my preferred recommendation of diversifying into the international asset classes. Look at the NASDAQ 100 ETF, look at some of the international funds, and that should hold you in good stead over the longer time.
In fact, as we speak, I think there's also an NFO that's ongoing. But anyway, besides that, we have a query coming in from Rohit Singh, who has written to us from Kolkata. Sorry, he's on the line with us. Hi, Rohit. Good afternoon.
Hi, ma'am. Good afternoon. Actually, I have invested in HDFC Balanced Advantage Fund, and I have it's a huge investment. It's like 8 lakh rupees I've already invested. It's coming around on an average of 31 rupees 20 paisa. Actually, previously it was Prudence Fund, and now it has been HDFC Balanced Fund. So I would like to know, should I hold it or should I shift it to some other fund?
Is this the only fund you're holding, or do you have a portfolio of mutual funds?
No. This is the only fund I have in mutual fund.
Okay, Anubhav, mostly the conundrum that we face is that portfolios are overly diversified. The conundrum now is that it is too focused?
It is definitely too focused. So, Rohit, the thing that you need to look at is asset allocation. Now, while in this case, your asset allocation is getting decided on by the fund manager itself, what you want to do is to create an asset allocation, probably start to diversify your investment into other equity and debt investments and take it up from there, and not just have one fund because you're just too heavily exposed to.
Anything you want to recommend?
Start buying ETFs in addition to your HDFC Balanced Advantage Fund.
So keep this going as is, perhaps prune the SIP a bit and look at further funds.
Actually transfer the SIP into the ETF mode.
Okay. Rohit, I hope that advice works for you.
Yes,
for now,
thanks.
It's time for us to take a very quick break. But before that, I'm going to toss it over to Mangalam, because Mangalam, I just cannot ignore Allahabad Bank's earnings that have come through.
Absolutely, Sumaira. You know, the stock has taken a sharp knock, down 12% as we speak. The street does not like the fact that asset quality has worsened, gross NPA on a quarter-on-quarter basis, along with the net NPA. And the company's posted a loss in excess of 1,800 crores for 2 consecutive quarters now. And remember, this has come in on account of elevated provisioning. So the provisions have come in at around 2,356 crores. This compares with around 1,497 crores. So we have an excess provisioning of about 850 odd crores, and the asset quality has worsened both on an absolute basis as well. So the gross non-performing assets now stand at 27,236 crores. This compares with 25,067 crores. So we've seen a 2,000 crore worth worsening in the gross non-performing assets as well. Higher provisioning. The company posts a net loss in excess of 1,800 crores, 1,900 crores thereabout. Over the last 2 quarters, they've posted a cumulative loss of in excess of 3,700 crores. The street does not like that one bit. The stock down 13%.
Saket Wag, who's on the line with us from Oman. Hi, Saket. Good afternoon. How can we help you?
Good afternoon. Thanks for picking up my query.
Sure.
I have shared my profile and the entire portfolio which I have, and I have 3 queries. One, kind of a holistic review of the mutual fund that I hold. Any recommendation? Second, I have 2 SIPs which are there for 2 lakhs per month for next 8 to 10 months. Considering the current volatility, do you recommend to continue the same SIPs that I hold? And the third query which I have is, since the market is fluctuating, I am okay to invest further to make that 2 lakh per month of SIP to 3 lakh. So should I explore that option? So these are the 3 queries that I have.
Okay, Saket, first of all, thanks very much for, seeking us out. And congratulations, because, your question is not whether he should pull out, but your question is rather, should I, invest a little bit more? It's not if I should redeem, but which are the funds that I should be invested in. So congratulations, Saket, on actually being a true blue investor. Anubhav, how can we help him? You've gone through his portfolio. It's actually quite extensive. Would you look at pruning the number of funds a little bit? Is this the right selection, and where can he put in the fresh money?
Right, so I'm guessing Saket's portfolio has started some time back and it has grown to this level, and it is not a retail portfolio anymore, first, right? And one, of course, as you just mentioned, there are far too many mutual funds in there. The other thing that is the slice that is not available for us is what's the asset allocation for this portfolio. What Saket needs to do is to first determine what's the asset allocation that he needs to look at, subsequently get into reducing the number of funds, definitely start to bring down his cost of investments, which is go to low cost, go to direct plans, those kind of things, and those things will hold him in good stead. SIPs, I think, would be something that you want to reconsider. Blindly investing periodically for an HNI is probably not a good idea. It works great for retail investors. What he might want to do is to use the asset allocation approach rather than just doing SIPs. Right? So as the market goes down, rebalance your portfolio. Fresh flows are used for rebalancing. That's how you need to start to invest going forward, because his portfolio is a pretty large one out here.
Saket, do you have a background in finance? Any more questions that you might have for Anubhav?
Yeah, I listened to the response. I'm already, investing right now in direct funds only. I started earlier with non-direct one. Later on, I realized 2-3 years back that direct is a more, favorable option. So I started with that. And of late, I have started kind of 2 lakhs per month of SIP. And in the current volatility, I was just giving a kind of a breakup that 30% will be in large cap, 30% will be in mid cap and small cap, and 30% in the balance, and 10 in multi cap. So whether this, breakup suits, in a long-term horizon, a good breakup, or you have a different recommendation altogether?
I do have a different recommendation. I think you want to increase your debt allocation a little bit, reduce your credit risk that you take, as well as look at international investment. I mean, you already have a dollar income. What you want to do is to spark a bit of that money into international assets for sure. It'll help you with all the rupee volatility and those kind of things that are going on, because you do have high growth markets outside India as well.
Okay. Sure. So I actually have that bit as well, which is not captured. It was completely from equity per se. I have got different PT which is there with other. So from an equity point of view, it is around 70% of my overall portfolio. So in that 70%, is it okay? Because 30% I did not share. Probably that's where that other debt funds are not visible here.
That's fine. That's perfect.
Okay, Saket, thanks very much for calling, and I hope this works for you. Do call in again should you feel the need to do so. Up next, Anmol Jain has written to us from Bangalore. He has investments in the Axis Long-Term Equity Fund as well as the ABSL Tax Relief Fund, and he wants advice. This ABSL Tax Relief today seems to be getting quite a lot of favor. So basically what he wants to do, Anmol, is that in 10 years' time, he wants to collect a corpus of about 1 crore. So he has 1 lakh invested in the Axis Fund and another lakh invested in the ABSL Fund. So now he wants to know what he should do about it. Should he increase it a little bit more? And just as a background, Anmol's a 24-year-old student.
Yeah, so he can take that risk for sure. I'm not sure if locking yourself into tax relief funds is such a hot idea. You want to definitely keep some leeway with yourself to take care of market volatilities, mid-cap movements, large-cap movements. I mean, look at a day like today. Yeah. You have a great movement on the large caps, but mid-caps have not done so well. At which point in time you rebalance your portfolio. So maybe start to look at one of the L&T or Mire mid-cap funds in addition to this, which is going to provide him with the growth, and the rest looks fine.
Okay, it's interesting actually you've mentioned L&T or Mire, because a lot of the smaller AMCs are actually now gaining quite a bit of traction, and I think they're also increasing their market share. So is that an advice that you're actively giving out to clients, is to look at smaller fund houses?
Right, so like smaller, but how small?
Okay,
right?
smaller than the top 5.
Yeah, that's smaller than the top 5 for sure. Because there are equity-focused fund houses like L&T and Mire that have done exceptionally well. And when I say exceptionally well, I'm not talking about general returns only, but their stock selection has been good. Some of the products they have put out there have been quite interesting. And for mutual fund investors, that looks like something they should consider. And not just look at basically index-hugging very large funds that are out there.
Okay, that's an interesting take, actually, and it's something that, the opinion is also getting a lot of traction because increasingly a lot of people are talking beyond the top 5. So that's good to hear. Up next, we have a query from Rohan Krishna. He wants suggestions on high-risk funds to reach a corpus of 1 crore by 2025 or latest by 2028.
Sure. Totally doable. And I love the question. Please suggest a few high-risk funds.
At least he's going in with his eyes open.
Absolutely.
I mean, not that I agree with him, but to be fair to the investor, he knows what he's getting into.
Yeah. So, I mean, look at the highest risk funds will be your sector funds, right? Some of those funds will do exceptionally well, some of them will not. The question is which ones, right? So, I would say for him, a better bet would be to go down the small cap, mid cap route, high risk, high return over longer periods of time, and that should, take care of his 28 goals.
Would you not tell him to not go down the route at all? Because, I mean, after all, which fund is going to get you a crore in 7 years?
I don't know how old he is, right? So, if he's in his 30s, most certainly not.
Right? Yeah, and actually, I don't even know how much. Okay, he has a SIP of 10,000 rupees a month.
Yeah,
Sorry,
yeah,
I missed that. Okay. All right, well, the jury's out on this one. Rohan, all the very best to you, though one would advise a more prudent approach to investing. And, high risk perhaps is better suited to an out-and-out direct equity investor, not really the mutual fund route. I mean, after all, you're coming to mutual funds to sort of try and stagger your risk. Up next, we have a query coming in from Arjun, who's written to us from England. He has investments in various funds, ABSL, Focus, HDFC Hybrid, as well as their Midcap fund, ICICI Value Discovery, and the Franklin India Equity Fund. He's been investing 5,000 rupees as an SIP in each of these funds. And he is looking to invest for a period of 15 to 20 years. His goal is his children's education. He has started just about 2 years back, so he still has close to 15 years plus to sort of try and achieve his aim. He hasn't told us the quantum that he wants to collect, but nevertheless, at least it looks like it's a decent beginning. Yeah,
fair enough. Right? I mean, so thumb rule, we can take about 15-20 lakhs at today's rates for education in India and 10 times that money outside, right? So this is an interesting one, and these questions have come up. So how do I plan for the next 15, 20, 25 years? One of the things that one needs to consider, and they're not very popular in the country right now, are target date funds or glide path funds, which means that your risk that you can take today is not the risk that you're willing to take with your kids, school fees, basically, 20 years down the line. So one of the things to do is to either get into some of the target date funds. They should be coming up in the country in a more popular way now. Alternatively, create those yourself, which means that you create a portfolio that will de-risk over blocks of 5 years over the next 20 years. So a risk today, 5 years down the line, it basically de-risks a little bit. So 80-20 could become, 70-30. Another 5 years down the line, it becomes 60-40. And then further down the line, it's a predominantly debt portfolio.
So let me understand this correctly. This is still in the suggestion of the planning phase, right?
Well, there have been some filings and all of that, and I think there are some
but there
target
is nothing
date funds on there.
The product is not in the market currently.
There are some target date funds. I'm not sure how effective they are.
Okay.
Right, these are typical products that you see on the insurance side and the pension side in India, but not on the mutual fund side, which I think should come up. It's a need of the hour.
Okay, Arjun, I hope that advice works for you. Our last query this afternoon comes in from Lejoy. He says that he has been investing in mutual funds via SIP for the last few years. He's also been increasing his SIP amount consistently. So that's a tick mark. His portfolio includes the HDFC hybrid equity. He also have the HDFC Equity Fund, Invesco India Contra Fund. He has Kotak Standard Multicap, SBI Blue Chip, Franklin India Smaller Companies Fund, as well as the ICICI Value Discovery Fund. So he wants you to perhaps just take a look at whether or not it looks like an all-rounded portfolio. I mean, I don't have his age, his risk profile, etc. To help you guide him, but overall, for an average investor, does this seem like a well-rounded portfolio?
So I think this, I'm just going to hazard a guess out here.
Yeah.
I haven't done the numbers on this. He will probably get a close to a nifty return over the longer period, or a NSE 100, BSE 100 type return. One of the things he should do again is to start to introduce debt and international components to his portfolio, because this 1 crore figures that you have on the target side will not be achievable by simply investing into 6 equity funds. So determine how much you want to put into mid caps and large caps, segregate funds on those bases. There are enough websites out there to actually give you those rankings, and then take it up from there. Some of the popular ones are from some of the big 5. Some of the more interesting ones are from the next 5. So there's enough and more, stuff happening for someone to actually rejig their portfolio. And now's a great time. Every second day you have a fall in the market where you can buy, and every third day you have a rise in the market where you can sell.
All right, Lijoy, I hope you were listening in, and I hope that advice works for you. Anubhav, thanks very much for joining in.
You're most welcome, Sumaira.